Welcome on in, folks. It's Natasha Barella, the Moneyista, 20 years total in audit, accounting, and tax, 13 in the large business and international division of the Internal Revenue Service, where I examine large entities that report 10 million or more in gross receipts and or assets and the high net worth individuals associated. I'm a business owner. I'm a real estate investor. I'm a tax strategist. So I want to talk about 401ks. This is not going to be a popular topic, but I'm going to tell my truth, right? So I don't have as much faith in 401ks because I think, in my opinion, they were, they are a thing of the past, right? What once worked for our parents and grandparents does not necessarily work. And we can tell by what happens with the stock market when things go awry. So way back when, and just so you know, I come from a wage earning, an immigrant family member, parents, right? And I went to school, took out $1 billion in loans, 85,000 I came out with. I graduated undergrad with a lot of credit card debt because, it was predatory then. I don't know how it is now. It's been a while. Where you had, credit card vendors soliciting credit cards to students. And most of us with no financial literacy, we overused them. I ended up paying them off when I graduated undergrad with my savings from my job and any funds that were remitted to me from student loan payments that were in excess of the actual bill. And so I graduated with no credit card debt, and I kind of, used that as a lesson not to really build a lot of credit card debt, just to kind of clean up my credit. And that was my time to really build my credit score. Now, I did go to grad school, and I came out with 85 grand in student loans. And so at about age of 35, so maybe about 10 years or so, I decided that I wanted to pay off my student loans because they were a blockage in my financial artery. I couldn't do much. I tried to purchase more property. I had already purchased a property and converted it into a rental. And so I decided to take out my 401k and pay off my student loans. Now, I know a lot of people are thinking, but you have to pay penalties and taxes. This is true. So here's two sides of the coin. For me, I had already converted my my primary residence into a rental. So I got a lot of the tax benefits of being a landlord: depreciation, bonus depreciation, mortgage interest, HOA fees, things of that nature. And so it kind of offset a lot of my tax liability. Okay, so I really didn't pay. I don't even think I had a large tax. I may have had to pay maybe $2,000 in the end, if any. I don't even remember. Usually I remember large hits, that hurt. It didn't. If I had to pay anything, it was probably very, very small. And so I looked at the cost benefit analysis, right? A lot of people will say, well, you're missing out on the compounding interest of your 401k, but also I was not making enough money to keep up with the student loan payments, and I wasn't able to really deduct the interest payments because I made too much money. And I think that the threshold was like 75K. I don't know what it is now because I don't specialize in individual tax returns, only in the form of business and ownership and real estate and how to offset your ordinary income. So I ended up taking the money out. And to be honest, and that's one side of the coin, it opened up a world for me. And I was able to take my salary and recontribute to my 401k max, right? And I recouped the funds pretty quickly and ended up working on my own business because I was fortunate enough, unlike a lot of people, to be aligned with people who were wealthy via their tax returns, their financial statements. If you don't know, a lot of large businesses, they have to have a balance sheet and income statements that they provide when you're under an exam. So I got to see all of the nice stuff, all of the good guts of finances and how people spent their money and where they pumped their money and basically how they viewed money, right? You can tell a story about someone and a business when you see their finances, right? And so I knew it was more important to be free than to count on something that, wasn't guaranteed, which was my 401k, right? I think like 40% of people ages 65 to 69 can afford 1 year basic elder care. Okay, so it doesn't work in a lot of cases. A lot of us will not have enough money in retirement. And so that being said, the other side of the coin is, well, what if you didn't have the rental? So there's a 20% obviously tax and penalties and all that good stuff. And most of us don't have 85K in student loans. Most of us, maybe, I think the average balance is somewhere between 25 and 30. We'll just say 50 for a round number. And so you have to think about it this way. And I'm not saying take your money out your 401k. I'm saying think about it this way. If you have crushing debt, you can't keep up with your credit card payments. It's affecting your credit. You have medical expenses that were one time, right? And you've fixed your behavior, your spending behavior. You need space to climb out of it, right? Consider this. If you have like $50,000 in student loans and you have, say, $100,000 in your 401k, your penalty is what, 20%? So that's about what, 10 grand? And then you have your penalty. Okay. So is it worth it to pay the 10 grand, right? Over the 50 grand and have your credit clear and get on a payment plan with the IRS? These are things that I considered before I made the decision, right? 85,000, 20% is about what, 17 grand. Okay. I would rather owe the IRS 17 grand than have 85 grand sitting in, on my balance sheet as a monthly expense, which was very, very high. Okay. I didn't qualify for deferment. I made too much. I was single, no tax. If I was single, and if I had no tax shelter like my condo, I would, be doubly screwed. Right. So I had to kind of make the decision. So if I didn't have a condo, I would have made the decision. Do I get on a payment plan with the IRS, which is not on my credit, right? Not on my credit, and downgrade my expenses, right? Maybe rent a room instead of an apartment. I know a lot of you have families. You can't do that. Maybe live with a family member, budget so that you can pay it off, because it's easier to pay off 17 than 85. You can get on a payment plan or keep that money on your balance sheet, right? On your credit report so that you can't move forward, right? So the bigger picture for me was that I cleaned it up. It was off my credit, and I was able to purchase several properties after that because my credit shot up to like past 840. It was like 847 or something like that, right? Still is. And so I did a cost benefit analysis. What money would I have lost for the compounding interest and what money would I have paid in interest to student loans, because I was barely keeping up, like most people. Again, I'm not telling you to raid your 401k and just be reckless. I'm saying consider the present value of $1. What could you do now with no credit card bills, right? What could you do now with no student loans? And most of you don't have what I had in student loans, right? If you have a graduate degree, you most likely have maybe about 65 and above, 85 in student loans. And you're pumping this money into your 401k that is, volatile maybe at times. And your student loan payments that have interest that only go up. So that's just, my take on it. It was a great decision. I'm glad I made it. I wasn't afraid after I did my own cost benefit analysis. And if you join the Tax Strategies Mastermind, I do more of a breakdown in that way, in that concept. You get a free breaking down credit course that's included. So I'm going to drop the link in the description box below. Again, I'm not telling you to go ahead and dump your 401k. I'm saying what is stopping you, and are you ever going to be able to come out of that debt on your own from your income? Okay? Because what they don't tell you is if you free up yourself now, you can go further than what your 401k will take you. Just my 2 cents. Feel free to respectfully disagree in the comments. Tell me what your experience is. And, if you are a business owner or a real estate investor, you can really benefit from offsetting any taxes due from utilizing your 401k to take away things that are only blocking your financial arteries. I'm not saying to take it out to curb your poor spending behavior if you have it, but you can fix your your balance sheet and your income statement by utilizing what you have. It's terrible to stay in financial purgatory, right, for a day when you do retire and that money is sitting there, but you still have this debt that you've been carrying for years. So you're using that money that you've been plugging away to pay the same debt that you incurred many, many moons ago, right? So that's just the way of looking at it. I'm always looking to open the doors for you to start thinking about your own finances. I want everybody to know my story, because I want you to understand what I did and why I did it, because it is available. I am the average W-2 that made it into financial freedom, which by definition is not being a multimillionaire. It is being able to pay your expenses with your passive income. Okay, everybody's definition of comfort is different. I'm a very simple girl. I live very simply. I'm okay with a 2-bedroom apartment or even a 1-bedroom apartment. I'm okay. I'm a very simple girl. I don't mind, a tiny house. I don't mind any of that. So I know a lot of you feel the same way. Again, I come from humble beginnings, so sacrificing doesn't really hurt me. All right, so I'm signing off, you guys. I'll drop the link to the Tax Strategies Mastermind below, and we can get you off to tax favorable income. Okay, bye.